you guys, I think, had about almost 600,000 square feet of space that you're building out for 3 different uses. And unfortunately, when I was writing down for the other 2 groups, I didn't inherently write down total square footage. Can you guys remember what your total square footage, not including parking, but just the 3 primary uses were?
Yeah, we had 91,000 on office.
Right, I remember that. You had 38,000 for retail, but then you didn't really have broken down like for square footage for the condo and
Gross or?
gross.
Yeah, 34,000 retail. Condos were 50,000 roughly. Hotels 293. Parking is 243.
Spread out parking a little more.
About what, 400,000, right?
So basically what, just to make sure I'm just kind of clear, these guys skimped out on the parking. They effectively chose for their reasons to not include as much parking because you guys have only got, you said about 287 spaces. Whereas you guys,
323 they said, right?
well, one of them we did 726 parking spaces and the other group did about, what, 600, 500?
487?
Yeah, 500 parking
How
spaces.
many square feet, you know?
So,
Hotel residence? I know our residents were 1,500 square feet each.
The hotel condo was about
On average.
Yeah, 487 parking spaces.
so I guess part of what I'm trying to do in my mind is reconcile why you guys chose to have so few parking spaces relative, obviously, to the other 2 groups, you know, roughly 500 versus 700, and you guys only did 287. That's not even quite, because the existing parking at present was what?
Like 400.
So you're actually net loss for parking what's already there. It seems to me that you would not want to go in that direction. You would have obviously wanted to add spaces above and beyond what's already currently there. If that's such a, I mean, you know, not trying to be overly critical, but I mean, you know, it only seems logical to me that you would want to sort of say, here's the baseline of where we are right this minute. Parking is clearly a problem down here. Why would we not want to try to add more to that? I mean, what's your, I guess, answer to that?
I guess you could say we wanted to maximize our profit.
But these groups are saying that actually one of the most profitable uses is parking.
We're gonna sell out the whole project. Well, I mean, our like strategy is as a condo, so we're not gonna see any profit out of the parking or out of the rental.
Okay, so you're looking at it then purely as.
I mean, underestimated the parking use that we were gonna need, but if we were to have to give an explanation, I guess our most logical explanation was we wanted to maximize our profit by having.
No, I don't inherently have a problem with that. I'm just, but you know, this is part of to me is like understanding what your strategy is. You know, I think that strategy makes sense. I think, but at the same time, you know, one could argue, well, is that really being, you know, truly responsible in one sense that you're adding all of this additional square footage of all these uses to the area, but yet it's not going to be serviced well with parking, and is that going to be a problem for not only short-term value but long-term value of the project? That, you know, nothing is worse than you know, having a situation of where you have insufficient parking and it becomes the #1 complaint, and then all of a sudden, is that going to be a situation where your hotel's not going to fill up because there's not adequate parking, your condos aren't going to be, you know, well sought after because there's inadequate parking, so forth, so on.
And also you have to commit almost 100 spaces to the condominium next door of your 2-something
Right.
spaces.
Or terminate the lease.
So
buy out the,
that, to me, that's the
for the resident.
you know, my biggest concern with yours is, you know, this whole business of, and then on top of that, you're saying you want to offer some free parking. I'm really confused by that. I mean, you know, and I'm not, once again, I'm not trying to be, overly, but I mean, at first glance, it's like, you've got a ridiculously small amount of parking, less than was there before, and then now you're saying you want to offer free parking, and this museum thing, that, who's gonna make money off of that? I mean, it doesn't seem to, I mean, what's the motivation behind the museum? I mean, is it simply to honor?
It was simply to honor Myrtle Woodson's deed transfer to Gonzaga University, but also there was one part of I don't know if you have the MIT contract in front of you, but there was one part where Gonzaga emphasized that they want something to contribute to them as well as the community, and I figured since there's an art museum and there's a sea aquarium, and Seattle has a lot of history, why not put that dedicated history museum to Gonzaga University and have them as the main beneficiary for it?
How much square footage does that take up?
That's a good question. Can you go back to the other slide?
Which one?
I think it's the layout.
It looked like a really small.
It was
Yeah, it just
small.
looks like
I
a
actually got the
sliver.
concept from the Meisner Park, where they have the art museum there. It's like 2 floors, it's right in the corner of the building. Alright, so yeah, sorry, it's hidden up there. I think it was about a total of, I want to say about, I think it was like 6,000 square feet or something like that. It was small. It was really small. It was enough to go in, come out. That's it.
Okay, it just seems like an awkward thing to put there, I guess, and,
Well, if you were to put the museum, where would you have?
well, first of all, I wouldn't have a museum.
Okay.
Because I just don't think that from a cash flow perspective, it makes any sense at all. Museums are, for the most part, big losers, from a cash flow perspective. So that in and of itself is kind of problematic. Now, I can understand if it's a requirement that, you need to provide, some level of attribution to, Myrtle or to the university,
Yeah, that was the main drive there.
but at the same time, we have to be very careful. I mean, effectively giving away 6,000 square feet of space, that's not an insignificant thing. So, I don't know, it just struck me as odd.
Yeah.
Yeah, with the museum concept, I thought it was a pretty smart idea because it's drawing tourists, or at least it's drawing people to the hotel in that area. How do museums make their money? Donations?
Yeah, donations, local residents supporting it. That's also the reason, Dr. Forgy, that I also highly like the museum idea was because of the residents. As we watched the presentation, they continually emphasized on the history and the local residents. They want to keep their historical background, but at the same time they want to grow. So I also felt like that would accomplish both sides of the spectrum for them. But from, like you said, from cash flow standpoint, it doesn't.
I mean, could you not accomplish the same thing by just, incorporating some of those elements into the lobby of your buildings? As opposed to setting aside separate space. I don't know.
Or do the sidewalk idea.
I mean, it's not too big of a deal. It just, like I said, those are just things that, if I were an investor in this, that struck me as very odd. The parking thing, the museum, component, and then, on the presentation thing, unfortunately, a lot of your slides were unreadable because of the background and the color choices, with that white font on the light green background. I honestly could not see a lot of the information there. And so that's a real significant issue in terms of being able to effectively communicate the information if I'm having to squint to try to recognize what the information is.
Originally we had that problem and we changed the transparent. I think a lot of it's the projector. If I can show you on a laptop, it's completely different. I mean, it's a huge difference. I think that's part of the reason why you have a hard time seeing this, because it looks nothing like that on a computer versus on the projector. If you want, I'll send it to you right now.
I'm just saying, it's very difficult to follow the presentation where I can't really see what's printed there. So that's definitely a concern just for future reference to think about. Yeah.
So the sort of concept is to sell the hotel and all the
Yeah,
condominiums.
We're getting rid of all, just
Build and sell.
build it, sell it, exactly.
But how do you approach that as far as like, you know, the marketability of the hotel? Is there like a sort of like operation stage, and do you factor that into your cash flow at all?
What do you mean, like?
Because I mean, okay, so you build a hotel, when do you sell it? Do you sell it as soon as construction is finished? Because how marketable is it at that point? Or is it after you run it for 2 or 3 years?
No, we don't wanna have any operations attached to us. Best case scenario obviously would be to sell it off pre-construction. We're trying to build something that's gonna be a really good development that's probably gonna hopefully is gonna attract big hotel chains. So best case scenario, sell it before pre-construction. Worst case scenario, we would wanna sell it at the end of construction. We
So-
don't wanna hold it if we don't have to.
So you're technically building a spec hotel?
Well, hotels usually don't. I mean, hotels are not really different or are they?
I think they are. I think, I mean, I'm no hotel expert, but I think you really have to, you're the developer and you sort of target, right? You can help me on this, a brand, but you're usually the operator and the brand attaches itself to your hotel. So I don't know how many, folks are out there looking to buy a vacant hotel building.
Oh, I see what you mean.
A
So
lot-
how it
a
works
lot
is,
of the-
Well, you're not,
A lot of the flags that you fly for the hotels will have certain requirements, like the lobby has to look like this and be this size, and elevators have to be this far away from the reception, and you have to have balconies, like there's so many requirements, it's crazy. How big your amenities are, so I think it's impossible to build a spec
It's impossible to build.
hotel, but
Or condos, right?
normally I don't think you would go forward with it unless you had the commitment from the flag,
Right.
from the,
or
That's
like
actual-
someone that's
From
going
the
to
end
buy
buyer.
it with that
Yeah.
flag.
Yeah, prior to construction.
I see what you mean, I didn't know it worked that way. We
not,
didn't know it worked that way.
not necessarily,
I think
Not
you
even-
build spec hotel, I don't think it's
Yeah.
possible.
I don't really see many people building spec condos, spec anything.
no, hotels, specifically hotels.
Yeah,
Spec
I'm saying
condos,
just in terms of anything, really. I mean,
Yeah.
essentially, spec homes is really nothing.
spec hotels, you can build the structure of a hotel with the standard luxury 5-star requirements, and then just, there's a segment, like a
But who's gonna
concept.
finance
So
that?
then you're reaching to a 5-star flag.
If you're a 5-star, and you can have a benchmark, you entertain and have LOIs with 5 different ones and not select one until you're ready.
Okay.
And that's actually even how you do it.
Yeah.
You don't select the one until you're laid on in the game.
So who's
But that's if
providing-
you're gonna
The
be,
bank.
that's if you're gonna maintain ownership though, right?
No, you can sell it out.
So you buy the building without an end user, and then after you
The
finish
end
the
user,
building, sell.
the developer's not an operator. The brand is the operator. The developer is a developer, and the management comes into Continental, they will operate the
Right,
building.
right.
Okay, whoever you decide is gonna be the operator. So you can sell it as soon as it's done to a third party, to your REIT, for example.
Right,
Once you have the brand in place.
right, in place.
Okay? Or a third party, maybe that we sold the Raleigh Hotel.
But you can't fit out the rooms and everything unless you know the branding or
No.
the blackboard.
You can even decide that you're gonna be your own operator. We decided, for example, one of our hotels in South Beach, not to brand it, not to give it to any management company, and we created a management company just for that specific asset, to have it unencumbered
But that was a
from.
rehab of the existing building.
Huh?
That was a rehab of an existing.
We have,
building.
yeah, it's a building
Yeah,
that,
it's different, and it's more boutique and from ground up.
I'm just trying to wrap my mind around how do you, like, where does do you guys fund the entire
We
cost?
fund, yeah, we fund 50%.
I'm just thinking about the risk involved in that though, like you put out the entire amount.
Yeah, there's obviously a lot of risk involved. We're just trying.
that's
We're just
what
willing to
we're
take that
talking about the wood.
Always, too. That's the highest risk you can take.
You're
Right
putting
now,
up 50%.
we're buying a hotel,
Yeah.
and there's no operator. It's no operator. The hotel actually it's ready for May. The hotel itself.
Is
So
that
it will
existing
be a
building now?
4-star, huh?
That's an existing building,
No, it's a brand new
brand
development.
new?
So they built it
On spec.
on spec.
Based on 4-star, they selected 4,
And how's that
they
process
benchmark,
going?
it's beautiful. They
Okay,
benchmark,
if you think about it, man, when a five-star hotels are five-star hotels.
Yeah, I agree, I'm just
I
trying to
mean,
figure out the
What's,
financing of it.
if you build for a five-star hotel, the amenities and everything are you can
There's
build
a
on
set-
spec. Why not?
the finishes
that
is
for you,
where
yeah, but-
it may change.
No, I mean, I think, you know, as a general rule,
You want to
you
have-
typically have a particular flag or a couple of flags in mind when you go into developing the product. As a general rule, always exceptions, but, because, as you said, there are very, very specific criteria that have to be met that are unique maybe to that flag. And, that's not to say that, you know, you could not build a hotel that met the standards of multiple flags. It's just, I think, as a general rule, you kind of tend to go in with the notion of a particular flag in mind, because that's the one that you're trying to meet those standards.
Or you do an unbranded hotel, the way around,
Yeah.
work around.
Yeah, which there,
TVs,
then
bills,
everything is
yeah.
no holds barred, you know, kind of anything goes, so.
So there's some.
The thing is with the luxury, they're the ones that have no requirements.
Exactly.
And if you go to Ritz-Carlton, Four Seasons,
So how do you value that then? So you got a luxury building, and you build it, right? How do you then value that? If there's no cash flow, do you value it just based on what you
You're
think
still
the
gonna
replacement
you're
cost?
still gonna value it based upon the number of rooms,
Right.
and then other ancillary revenue sources that, you know, because obviously if it has, you know, conference space, banquet space, you know, restaurant space, you know, all those other ancillary things versus, you would expect it would
Right.
with a luxury brand. But, you know, add those in, and then ultimately you sort of come up with the cost based on the number of rooms at that level. But I would argue that it may be challenging just from the standpoint of if you're gonna, certain keys or certain flags command, you know, a certain price premium because it's not inherently just the inherent cost of compliance with that standard for Marriott versus Hilton versus whoever. It's also the fees that have to be paid, usually on a per room basis, to those individual flags to certify or allow you to brand your hotel with their flag.
Plus you get on their reservation,
Yeah, all the other, you know, ancillary.
things, so, you know, if they're full or, you know, I mean, that drives a ton of traffic to
But anyway, but beyond all that, yeah, it is I guess, it is a challenge, much more of a risky challenge to sort of say, we're just gonna simply build a quote-unquote luxury hotel, totally unbranded, and, you know, there, I think the risk is just higher.
Or unless you're proven operators, then
No.
potentially you're okay with doing that.
But even so, you know, there's still a fair amount of risk.
Sure, yeah.
the risk and the higher risk is your cap rate is gonna go very high
Sure.
because you don't have a brand.
Yeah.
And unless you're in a superb location, which is not
I mean,
downtown
because
Seattle.
it also who your investors are. I mean,
Yeah.
there's so many different variables at play, you know, there's not an absolute answer.
And like South Beach is more of a boutique market, so I think you could, in some of these older hotels, that could never be a Four Seasons, because of the structure that they're already existing in.
Oh, no,
Then they
wait.
can be, you
They
know,
die,
Astor Hotel or
they
whatever.
die Four Seasons, Bulgari, and all of the super luxury brands.
Let me ask you guys an example.
They die to be in South Beach for some.
Right, but not a boutique hotel.
They do. They don't
Even
really
for like
care,
a
yes.
30 room hotel?
For a 30, no, but this is not a 30, but over 95 rooms,
Yeah.
keys, they will go for it. But my point is that depends on the location. If you have a superb location like Manhattan and the best location, don't call it South Beach, call it Manhattan or Cartagena. then you may do a benchmark and sell it upon a benchmark, and that may be, but
Yeah.
Okay.
it's just very difficult.
What about a hotel like the Boca Resort? The Boca Raton was unbranded for many years and it's obviously is that just an outlier?
I would say, yeah. I mean, because it's just the, you know, as I said, there are always exceptions, always
That's
exceptions.
one of them.
Yeah.
Gotcha.
Okay, all right, thank you very much. Thank you. Okay, do we need to take a break or we all good? Good, all right.
Press it.
5 minutes.
Yeah, to the bathroom.
Good job, man. Thank you.
Smoke it.
I still send it to you?
Sure.
Taking a break, then. Yeah, we're going to lunch.
So you're taking a break? Are we gonna? She went to the bathroom, so we're taking a break. Yeah, you wanna put it? I'll do it.
We're gonna do it.
No, but Irene just wants stuff in here, so we have. The retail, she added more stuff. Because we didn't have retail.
Yeah, but it's in your
It's on my USB.
Where does it apply to this?
No, this doesn't change. No, she just added this stuff.
So every single time I say Bolton, now I learn to say Bolton. I said like 3 times. Bolton. Well, Bolton. What's the name?
Mark got me hung up on how to pronounce university. Mark, you didn't say the name correctly.
Gonzaga?
I said whatever you said.
It's Gonzaga. You guys Gonzaga University.
Gonzaga or Gonzaga?
Gonzaga. Wait, not it's Gonzaga.
Yeah.
Yeah, what else? You got Gonzaga, I heard, or Gonzaga.
A lot of different variations.
I've heard a lot of different names.
The G.
The G. GU.
Here?
What's their mascot?
What do you want to do? Why do you want to do something else?
That's right in front of property like that's a university.
Can I hold?
Yeah, yeah.
Okay, okay.
I don't know.
Yeah.
Several buildings on our campus were donations.
On his property.
The business school was a donation, the parking garage was a donation, the student center was a donation, the library was a donation.
Yeah, but that's a donation to benefit the university.
Happens all the time.
She the only one over. We had a break.
Yeah.
Okay.
What's the name of your team?
Yeah, because she left and she has, we're missing a member of our team. She's in the bathroom.
Take a 5-minute, guys, if you want.
Yes, Captain. I'll take 5.
Hey, man, this is.
I'll take 10.
Good.
Whatever.
So we do break for about 2-hour discussion after this? Or-
Yeah.
But yeah, if you want to do it,
Would you like last take class?
Let's stay ready.
You want to go back?
I'm not gonna see you guys.
All next week.
What's your guys' team name?
Yeah, that's what I said. If you want to do it, you can go ahead. I was confused. Like, if you want to do it,
You want my
or
sweater?
Daryl, why don't you teach me how to write blog?
Team name.
Blog master.
we're
I'll send you the format.
Team Sharks.
Sharks. There we go. Just off the top of his head.
He said it was team 2, Sharks.
Team 2? Yeah, that
Team
works.
2.
Sharks, AKA Sharks?
Yeah.
That's what I'm gonna write. So.
Question. Are you gonna put
Forward space, back
test
space.
today online?
Once she's taking it, yeah.
Okay, so you're just gonna work it
Yeah,
out?
yeah.
Perfect.
Sure, right? Has anyone spoke to it?
Go ahead. Bring it. Go ahead. Think about it.
Dustin. Dustin, you spoke to
That's what we
it?
do, man.
True herself?
Motivated, excited.
Did you speak with her?
Uh,
She okay? Is she alive? No? You didn't speak with her? Anybody?
Send me a text.
You sent her a text?
Yeah,
She sent you a text?
yeah.
Just says I'm not gonna be here today.
Yeah.
Oh.
I saw her in the parade.
12 o'clock.
Isn't that the one I saw outside? She was on a float, wasn't she? Wasn't she on a float?
Oh, wait, was there?
Yeah, Maricel was on a float, and my name is Dustin Anderson.
Dude, we had to run in front of like, what were those three, there were like these three, the things where you drink and run.
The light?
The light.
You did it?
No, we ran across, that's why we should run across the parade to get to class.
That looks exhausting. I would never do that.
Especially if you're drinking.
Oh, wait until you stand up. The drink walk off that bike and just. The drink. Why am I not going
So,
sideways?
the national stuff is there, so you can open it, the Excel.
Can I consider drinking and driving?
Theoretically.
You're gonna have
Well, I know, but they have those things where it's like a table and it goes, you know, I'm facing. It doesn't work.
You guys are just the motors.
Yeah, but they have someone drinking, but isn't that still?
They have the guy.
Isn't that still? I can't drive right now. My age is just
The question is, does that guy?
That's the only part we actually
need.
Or, I'm saying,
Can he have he must have a driver's license.
well, then you got
I've never seen it on a weekday.
He gets it back.
You go down the street, all bars, and come over here, 3 or 4 business.
Blowing up here.
Okay, you guys got it uploaded yet?
Nice team
We're
member.
ready. Waiting for
If you don't know that now. Shut up.
Okay.
Bahar's.
cigarette break.
Yeah,
You guys know. You got the clicker?
Yeah.
Who's got the clicker?
we don't have a clicker. We don't need a clicker.
We got, McCoy. It's our kid.
The real McCoy.
Yeah, man, I'm here.
I know it is, we have, we can use it. The
I don't need no clicker.
yeah, we can.
You gotta
Why
go
not?
get your clicker.
Dude, let her get
She, I guess she wanted to.
Yeah, sure you don't want the clicker?
Show, you can show me. I would like to learn it.
Easy. Next slide, previous slide.
Okay.
Laser pointer, middle button.
Oh,
I like more to it.
That's
All
it.
right.
that's under control.
Champ, you see it?
Yeah, and walkthrough after the after the next one. So now they look back. I like that.
Project Pro is due Wednesday.
Friday, 6 o'clock.
You can use it.
I don't know.
For that.
Oh, I see, okay.
It's 5.
Fine, okay.
5 of the 8, I guess.
You already did them?
However many.
Bob Masher.
Ladies and gentlemen, good
Okay,
afternoon or
so
good
sorry.
evening.
Hold it up.
Yes.
If you wanna,
Uh,
I'll do it.
Oh, hello.
okay. We are here. We are. Good evening. We're Group 2. My name is Daryl Blue. Okay. And we are here to, as a developer in the Seattle area. As here is Irene. She is the marketing analysis, and Mr. Jackson, the incomparable one, is the site analyst. And Darrell here, he's the financial feasibility, and Ms. Lopez is the projected outline.
Project Pro and site analysis.
Right.
Yeah, good. Right.
Thank you very much. We recognize a transaction which we think is a very feasible, lucrative proposition. 2 parcels of land located in the Seattle waterfront district near the Elliott Bay shore. The seller, who is Gonzaga University is seeking to sell both parcels of land and is willing to entertain partnership with the buyers. 35,233 square feet. The first lot is a public parking garage with a view of Hellett Bay. The second plot, 105.600 square feet with 4 storage parking lot. With negotiation, market analysis, and financial feasibility, we have successfully acquired both packages. Parcel 1 attained a growth lease for 99 years with an increase of 2.5% in agreement with the university. We also agreed on a profit sharing of the net operation income of 5% of the hotel that will be built on the property. The first lot will develop into an 8-story, 5-star luxury hotel with 296 rooms, common space dedicated to top-tier spa, gym, and restaurant with high-end retail store with access to the boardwalk. The second parcel consists of 18-story condominium with 90 units and a 6-story parking garage that will meet the necessities of the hotel general resident and patron who will share in the use of this development. Breaking ground for these ventures determined to be first quarter of 2015 and scheduled to be open the fourth quarter of 2018. This project will provide an influx of jobs and will as boost the community economy. Now I turn over to Irene, who is the marketing analyst.
Well, first, we're going to talk about the hotel market and why we decided that the highest and best use of the property was a hotel with a combination of residential, branded residential, and I'm going to explain what is branded residential in a minute, and retail. It's a mixed-use development, and we felt that as the first team that luxury was the way to go. Not only because it represents only 3.5% of the total room supply, but the luxury segment is only a total of 1.1% of the market. We see that there is a very stable forecast right now in the occupancy levels is 71.8% for the next 5 years. That's very good for a city, and especially for the sub-market. And the margins on the NOI in the concept that we analyze are according, and they're very good for a 5-star, which are anywhere between 30 and 29%. So luxury, we thought that will bring a lot of added value. It's waterfront. There's not so many competitors. There's a lot of conventions coming into the market as we speak. There's tons of technology companies with young, I would say anywhere between 35 and 45 years old, with high income that will fit perfectly into this mixed use. Luxury is always something that will have a strong demand at the end of the end sale. Most of the institutional buyers will consider a Ritz-Carlton hotel a core real estate asset, even though a hotel is a mix between real estate and private equity, or an operation, and an operational asset. But it will be considered a AAA asset class. That's why we thought that a Ritz-Carlton will fit perfectly into this mix. Then we'll look into, that is something that we're gonna do on the parcel, the waterfront parcel. On the other parcel, we'll look into what will be the best and highest use. And we decided to go residential, but not just residential as any condominium, but a branded residential. After the 2008, the condo hotel market basically shut down. It's very difficult to finance a condo hotel. And the new trend, an agreement with the brands is branded residential, where the developer get a boost on the prices by calling the residences Ritz-Carlton's residences, and they will share the amenities of the residences with the hotel. Not necessarily they will contribute their units into the pool. And we're not accounting in our financial feasibility, we're not accounting for any contribution. This could happen later on, however, we're not accounting for it. It's a for sale product. It's a difficult to sell if you decide to do a condo hotel, and very difficult to finance in today's market. So if something like that happened, it will be at 20 to 25% of our total product that will be contributed to the hotel. Again, but we're not counting with it, and we're not gonna offer it as a condo hotel. Normally, people who buys a condo hotel expects a return, and with a luxury hotel and residence, branded residences, the homeowners association is very high, so there's no revenue. Even if they contributed to the hotel, there won't be any revenue left. So that's why we decided that go branded residential. I'm just not gonna go into the details. You guys already went into the details, but in any event, there's no hospitality branded real estate in the pipeline. It's very solid vacancy. I mean, it's very low vacancy. High-end prices, we have seen anywhere from $1 million. You're looking at $850 per square foot right now, sales in high-end in the new product coming online. So, and there's a lot of demand for this new product. Basically, some of the dynamics, of course, is market differentiation that will allow us to use a premium on pricing. The amenities that we're going to be able to offer will attract a high-end buyer and young entrepreneurs or young executives. Young, again, is anywhere between 35 to 50, okay? Yeah. I mean, that will make the money to buy it. Okay. We're also going to mix it with retail. Retail, in this case, is not only the retail in the bottom floor. We also have product that is the spa. We have a gym, we have a juice bar, we have a restaurant, we have a rooftop lounge, and all of that we can take into account as a part of the operation of the hotel, or we can lease it out. So there's two options, so that is considered retail as well.
What do you think? Maybe,
yeah.
it's a good point to make, because obviously some hotels do keep it internal versus effectively outsourcing it. Any particular perspective on what might be better?
Lease it out. Yeah, lease it out is easier for the hotel. You don't account that much of the revenue from your FF&E and your F&B from the restaurant. More is from the room service, not from the restaurant per se. So you prefer to have a steady income on the restaurant side and bring a name into, a good name, somebody very well known in New York or something like that. A very good spa, Equinox or Equinox Gym, something on that line that will bring those young entrepreneurs, young babies. So the other thing that we saw on the retail side is that the rental rates are right now pre-recession level. They are over $25 per square foot. Considering that we're waterfront, we're having a mix on the retail front because this will support high-end retail on the waterfront side. Retail like Cartier or Hermès or very high-end that will demand a higher rent, anywhere from 30 to 32. However, the ones in the back, in the second side, on the laterals, those are more service-oriented retail, like a bakery, like a bank, or that will go and demand a lower rent, and it will be anywhere 25. So our average rent is $27 per square foot. The growth on the retail side in this subsegment has been almost zero over the past couple of years. However, the vacancy is very low. But one thing that is interesting is that Seattle is experiencing so many strong demands, growing buying power, that power is expected to increase in at least by 20%. And that will support at least 1.5 million square feet of new retail in the area. So that gives us a very good case why build retail around side and alongside our space and lease out what normally will be F&B of the hotel. Oh, and the last thing is, in terms of sales, we found that institutional buyers are willing and looking for retail components or retail sites of shopping malls and in the area of Seattle. And the latest sale was a mall that has a Barney's and some of the national tenants for 4.5 cap rate, which is a very good, very low cap rate for Seattle. So it's looking good for Seattle, their retail.
Next, we want to talk about a little of the site analysis itself. As you see, this is parcel 1, which is going to be the 8-story hotel. It has the retail component at the bottom. We actually have a floor plate size of 21,000, as you see, 541 square feet. The total square feet footage of the hotel is 215,407 square feet. What we decided to do is put our engineering, mechanical rooms underground and storage rooms underground of the hotel. The first floor would have 15-foot ceilings, space for our lobby, front desk. We have a 5,000 square foot restaurant we want to put here on the corner. Also, we have 4,000 square foot of retail space that we have on this level. The second floor will consist of a ballroom, along with the kitchen area to service the hotel. Also, rooms for employees to have breaks and things like that also will be on that floor. Floors 3 through 6 are actually going to have 39 550 square foot standard size rooms. And that's 39 rooms per floor, and each having 10-foot ceilings. The 7th floor is going to have 28 750 square foot executive suites on that level. And the 8th floor, as you see here, is going to have 12-foot ceilings. We're going to have one presidential suite that's 1,650 square feet. We're going to have 8 full suites that's going to be 1,000 square feet each. Also, we're going to have 12 750 square foot executive suites on that level. And that's the 8th floor. The 9th floor, well, the roof, well, actually, you see here, is we're going to have a component for a lounge, as Irene said, a bar area for the patrons of the hotel. We're going to have Lauren talk a little bit about building 2.
I think that's a great idea because you obviously don't want the residents across the street staring down at all the typical mechanical systems. So having that green roof and the rooftop lounge makes a lot of sense.
Yeah, we thought about it. Yeah, absolutely. And also, they still have a view because remember, this is also going to have a waterfront view. And they're not going to be deprived either at this level. Once we get into the schematics of this building, they're going to have a waterfront view also, which is going to host, as Laura's going to talk about, our other building.
Okay, so the second site we're going to have, it's gonna be here it is. The 18-story residential branded tower that's gonna be anchored by the Ritz-Carlton. And then we're gonna have a 7-story parking garage at the bottom. We're gonna have retail, the first floor. We're gonna have a lobby, elevators. They're gonna be private elevators for the residences, and then we're gonna have public elevators for the parking garages. 7-story garage. We're gonna have valet component. We're gonna have it's gonna be 457 parking stalls, and we're gonna have, well, there's 95 already assigned for the
Residences.
the Watermark residences. And then we'll have the skywalk that's gonna connect to our 8th floor, and we're gonna have, after that, we're gonna have 3 more floors for hotel component. After that, we'll have the tower, the residential towers. And then, let me see. Yeah. Then we have
One
the
thing
spa,
I actually
right?
wanted, just while I'm thinking about it, and I think this goes for everyone with respect to the parking, one thing that no one has brought up that I'm aware of is actually selling this parking spaces individually or requiring the individual owners of the residential units to buy the parking spaces. It's quite common, especially in really densely populated areas where parking is at a premium, but those parking spaces aren't guaranteed even to the residences, that, you know, you may pay $500,000 for the condo, but you may pay an extra $100,000 just for a parking space.
Yeah.
So, you know, that's something else to potentially think about.
Well, that's kind of,
That no one, I hadn't heard yet, so.
that's kind of why we chose to do valet parking instead of assigning them to each individual unit, so you can have constant traffic in and out of the garage.
Okay.
Yeah, just to give you a little bit more detailed breakdown of the parking. Actually, we decided to do the demolition of the garage, the old garage, at the same phase that as you will see in our Project Pro. The same time we're doing the first building, we want to demolish that garage to get the, in fact, we allocated 20 days for demolishing and removal of debris, because we have those tenants in the other building who is going to need parking. So we're planning basically to offer them a concession over the 68-year lease. We're going to give them 4 years free, prorated over the 68 years lease, to kind of satisfy the inability for them to park during this construction phase. Also, for the parking, the garage is going to actually be the first level of the parking garage. Is going to have retail. We're going to actually have 4,000 square foot of retail space. Along, like Laura said, the public elevators, the private elevators are going to be in operation. Unloading area, the loading area. Of course, we're going to have bike racks. 40 parking stalls on the first floor itself. Floors 2 through 7 is going to have a total of 457 parking spaces. And we've pretty much allocated 95 spaces dedicated to the tenants from the Watermark Tower. We have also dedicated 30% of the total room count for hotel and valet parking, which is a breakdown of pretty much 92 parking spaces. And also we decided, like, I don't know if you guys seen in New York where they have the stackable parking racks. We've actually decided to do 27 of those for the residents where they can stack them. Now the residents and the tenants, the patrons of the hotel, are going to be offered valet parking. So we can kind of circulate and keep everything moving in the parking lot. And we've also dedicated 150 spaces for public parking for some income.
What's the floor to ceiling height in the parking rack?
15 feet.
15 feet?
Yeah. On the first level, it's 15 feet. Great question. So that brings us to basically the 7th floor of garage space. So this won't compromise any view of the water. Right here, we're going to start with this that we dedicated to Miss Myrtle. Call it the Myrtle Skywalk Bridge. This 8th floor is going to allow hotel patrons for this building to actually cross over because we have rooms, hotel rooms in this side of the building. Awesome.
And the amenities.
Yes, and the amenities. In fact, the 8th floor itself, in the tower location, it's going to have 30-foot ceilings, 10 550 standard size rooms on that level. It's going to be a 500 square foot lobby area, 3,500 square foot spa area. It's going to have an 18 square foot lap pool on this level also, and a 900 square foot juice bar for those who like the juice. Floors 9 through 11 is going to basically have 27 standard size rooms per floor. And floors 12 through 17 are going to basically have 14 luxury condos. These are actually going to be the component of residential that we're going to sell. They're going to be 800 square foot 1-bedroom condos and 1,500 square foot 2-bedroom, 2-bath condos from floors 12 through 17. Okay, that's 14 on each floor of those. And they're going to, of course, have the water view. And we'll get into the schematics of its premium price per square footage for those condos and how we're going to generate money. The 18th floor is for all people like Dr. Forgy who can afford it. We're going to have 2 penthouse, 3,000 square foot penthouses, 4 2,000 square foot 2-bedroom with a den penthouse also on the 18th floor. And of course, at this point, you guys are like, how much is this going to cost, Frederick? And for that, we're going to turn to Daryl. Oh, I'm sorry. This is the spa, the renderings of the spa pool.
The laptop pools in Seattle are a commodity. As you guys know, it rains
All the time.
all the time. So indoor pools are totally in vogue, and they pay premium prices for any gym, any spa, or anything that has an indoor pool.
Okay, so after conducting our financial diligence and coming up with sources and uses of the development, we came up with this a 60% loan to value ratio that gives us 71 million, roughly 71 million of debt we would have to incur. Also from the private equity funds, you can see in the graphs here, it's about 35% contribution, and the developer 11 million for the land. For the sources, the capital for land acquisitions 11 million. The construction costs came out to about 107 million, which is about 85% of our development costs.
So,
Given the 11 million for both parcels?
No.
No, it's for just the
Remember
one
that what we said at the beginning is that what we're doing is a ground lease on one parcel. So we're valuing that ground lease at a $20 million because that's what we know that they refuse, as an offer from other people. So we offer them a ground lease, one of the parcel, and it's the second parcel. I'm sorry, the parcel in the back. No, the front parcel. I'm sorry, the front parcel.
And then 11 million.
And 11 million for the one that is in parking.
What's the ground
So
lease?
the ground lease is $1.83 million, which is like 5%.
1.866.
Yes, something like that.
And on top of that, right, we
And
give
then,
them.
yeah, and a profit sharing on the revenue of the hotel NOI to boost their return and entice them to do the deal with us.
And finally, we have debt interest from construction, or during construction, which was about 6% of our total development costs. All which added up to equal about 126 million in total development costs. Okay, here's a breakdown of each floor, floor by floor construction costs. And as you can take a look here, we have the square foot buildable area per floor, the amount cost per square foot on each floor, and then the total cost for the floor. Same down here with site 2, you can see the breakdown there. Once again, if you add both of those up, it came out to about 126 million in total development costs.
So you guys were significantly below all the other groups with regard to construction cost.
We are like $118 million. If you add up 69, 49, we're like 118. The other groups made bigger structures. We were a little bit more conservative in terms of the structure. We were more high-end. Our ADR on the hotel, ADR right now, the average is $300 a night. We think that anywhere between $300 and $400 were okay. Our cost per room is what it concerns us the most, to be very conservative, be below our ADR. And we were able to achieve it. And on our sale, because we're projected a 10-year hold period, we're still on a $300 per room, per key.
Just a quick question. One of the things that you guys implemented into your design, which our team actually looked into, was the skywalk. Relatively, what is the cost of construction for that particular skywalk? Because one of the reasons we took it out is because we thought it would be too expensive to actually implement that particular thing.
It's included, right?
Yeah, it is.
It's included on the cost. It's not, we don't have
We
a
don't have an
separate
individual
number for that. It's included on.
We built it off-site, man, and brought it.
I get
We
it.
delivered it through the harbor.
You said you're phasing them out, you're doing one and then the other, something?
No,
No, we're constructing at
We're
the same
demolishing the
time.
garage first, and then, but we're constructing both buildings at the same time.
Oh, okay.
Yeah.
Yeah.
That's what I was confused about. Okay.
Yeah.
Did you look into like the regulation requirements of like potentially doing the skywalk?
There's no problem with
There
doing the
wasn't anything
skywalk.
that,
Do you know what the space in between, like how big that skywalk would end up being? We thought about this and then we didn't dive into it, but I'm just curious since you guys have it.
yeah. It's the standard size. I mean, we don't have like numbers for that, but it's the
The
standard.
distance from one building. to the
Right,
next.
between.
Do you know?
Yeah.
No,
Well,
It's gotta be more- it's gotta be like 30 feet. Not that far.
I wouldn't
No,
say that
it's
street's
gotta be
30
more.
feet.
it's
a two-lane
remember
now.
it's a-
Plus sidewalk,
It's
plus
for,
the setback.
it's to
It's
walk.
really not a full street, that's
It's a
like
walking, it's a walking
little
bridge.
alley.
Standard walking bridge.
but with that street probably being dedicated to the city for right of way, do you have to get rights to the air rights to that particular parcel?
well, I don't think so.
We didn't find any
I thought that the
regulations or
city
anything
was-
other
It's
than
not,
that.
it's not that far.
I don't, yeah, but I don't,
To
we don't mean to drill you.
get ear rights.
Yeah, we were really interested in it. That's why I
No,
asked.
we didn't.
We didn't want to dive
We didn't find any information about what.
I thought they would be-
We didn't want anybody
We were given a
Oh, is that what-
permit, so we was given a permit, so we can construct
Maybe you're right.
How would you
it.
install the skywalk?
Huh?
How would you install the skywalk?
That's our secret sauce.
We're not,
That's our secret sauce.
Sorry.
we're not the general contractor.
We fired that guy.
You have a question?
Just kudos to the stackable parking. I mean, what a great idea for that, overcoming that challenge. Art was
Yeah, thanks.
great idea, great idea.
All right, so.
So you guys are incorporating lifts within your parking? I'm sorry, I was,
Yes, Taco, they have in New York.
yeah, I know, but have you considered the cost of the lifts? And then
Yes.
the mechanics and the
Yes,
operational costs?
it's our
It's
cost.
only a few floors. I think it's
No, I
only,
know.
what, 2 or 3 floors?
I didn't
No,
know.
no.
But with 15-foot floors,
I,
how is
That's
that
only the
doable?
first-
the
Right,
only
it's not a lot. It's
time that I
27
built
stalls.
something in my life was in North Bay Village.
Oh, with 15?
It's a condominium called the Adagio, and
I'm from
since I
New
didn't have
York, and those
enough
are about
place for
30
parking,
feet tall.
You
I
did
needed
that?
On two of
stackable.
them?
Yeah,
It work? Well,
just two.
It's perfect.
yeah.
Still works, and the
Mechanics are all
building is
good.
there, and
I never seen one in the garage.
I wasn't true, so.
I have seen them.
All right, so
I'm sorry.
back to the cash flows. Here's a breakdown of our cash flows from the start of construction to year 2030, about 15 years. Take a look. This construction cash flow, Albert cash flows here for the first 3 years during construction. And then here in year 4 or 2018, it's the residence cash flow from the sale of each residence. It's about 84 million or 85 million. Next line is the hotel cash flow, and it's per year. So total is roughly about
We started with a
90 million.
55% occupancy rate, and we escalated gradually until 70% by after a few years.
Down here at the bottom is the land that's leased, like Irene was stating earlier, that's for our ground lease. Per year, we're gonna pay roughly about, starting out 1.6, and we'll end up actually lower than that number, about 1.4. Down here at the bottom is the total cash flows for each year.
Is that after debt service or before?
Before the
Yeah, before.
Before?
Yeah. And with that, I'm gonna turn over the exit strategies and IRRs to Irene.
That's before cash flow, before taxes, and before paying debt service. So what we anticipated is, as he was explaining before, we're selling out the condominiums. We're calculating an exit on a 10-year to the 2018, 2028. We're very conservative. We're using a 6% cap rate to exit this property. That will give us an unlevered IRR of 11% and 11.9%. And as for the private equity side, an 11.9% unlevered IRR is a very good and very safe net to invest with us. So we're using, again, being this a hotel, we're being very conservative in terms of the leverage. Like we have heard from Dr. Forgy, a lot of leverage, it will improve our IRR, but we felt that the last recession gave us a lesson, which was don't lever more than 60% a hotel. If that happens, your probabilities to be able to come up with the money to pay your debt service is very unlikely, and you will end up upside down pretty fast.
So one of the things that you said, you have an exit cap rate of 7%, is that what I heard correctly?
6%.
6%.
Yes.
Even worse. So that's 10, 11, whatever years from now. Aren't you a bit concerned that that cap rate might be way too low, given that once again we are, anticipating that we're going to have higher interest rates at some point?
What we thought about it,
Okay.
and even if we did a sensitivity analysis.
Okay. Good.
And we did a sensitivity analysis first on a 7, 7.25, then a 6, and then a 5.5. Even at 7, 7.5, we were okay with the returns and the expectations on returns. So we do expect that the interest will gonna go up. However, on the interest rate on the leverage, we're calculating at 7%. Of course, this could change and it could go up to 8, but we're using our medium scenario, not our best case scenario and not our worst case scenario. And taking into account that economies normally take 7 years to turn around, and we expect that in 10, something happen again. For me in particular, I think that we're gonna see probably a correction in the market within the next 2 years. Higher interest rates and probably prices are gonna go up, in terms of caps are gonna go up, and residential is gonna probably suffer a bit. So.
Which is right about the time that your condos are going to be sold.
That's why we're being very aggressive in working very hard and diligently to deliver on time.
Pre-sales.
How do you
Yes, and pre-sales.
then, measure like that cap rate if it's 10 years out? What's the reasonable approach to take?
The reasonable approach is to start out with what they did, which was kind of do a range of values and sort of stress test it and see how high or how low could it go and what the resulting impact is going to be on the valuation. And, once again, all we have to do is to look at history and what cap rates have been at some point in time in our history and realize that, at the highest point, you had cap rates of, upper teens, 18, 19, almost 20%. normal cap rate was probably maybe, 10-ish. And now we're, like I said, we're in that territory where we're at the lowest cap rates we've ever seen. So one would have to say, well, is it gonna normalize again back at 8-ish, 9-ish, somewhere in that vicinity?
That's why
If you did not put escalation in your rent on your cash flow, couldn't you just take today's rental rate and today's cap rate, and then in 7 years from now, not knowing what either one is gonna be,
It won't be
at an okay assumption, saying that, well, as cap rates increase, so will,
Part of what I guess,
both are gonna.
you remember we had a whole discussion about merchant developers versus effectively more of developers that are build and hold. There is no question in my mind that merchant developers, the ones that, like Juan was describing, that pretty much go into the market, build it, lease it, sell it, are probably have the least risky, sort of approach. Because they're in, they're out, they've got their money, done. None of this long-term hold and, worry and concern about what, is potentially going to happen, several years into the future about cash flows. They sort of leave that to the operating, sort of investors. Yes, there are, those developers that do engage in projects that, yeah, they're gonna hold it long-term because they see maybe that the market is at a point right now where it's gonna be undervaluing their project, and hopefully they're gonna be able to sell it at some point whenever they feel like it's more adequately valued. Because, the market, especially, like, my experience has been, if you're like in an area that is maybe like a redeveloping area, currently the values are way down here, you redevelop a property, if you were to sell it right after redeveloping it, you're probably not gonna get much of a bump on the redevelopment. But if you wait maybe 4 or 5 years until several other projects have kind of been redeveloped and those projects have hit the market, then the bump is gonna be, much more, worth taking. Well, with a project like this, where it's all new construction, one has to kind of wonder that, that if you do have a 10-year hold, what is that market gonna look like 10 years from now, and is it really worth taking that risk of holding it? Especially if you're looking at a market that you kind of feel like we're at a peak with regard to the low cost of capital, that sort of thing. I would have a tendency as a developer to say, anything I build right now, I want to sell it, I want to get out of it, versus taking a chance on what 10 years out in the future. Now, if we were looking back maybe a few years historically, timing-wise, you might have had a little bit of a different perspective. But that's
Another reason we wanted to hold it also is because of the school. We're doing profit sharing with them also.
right.
So it kind of juices the deal for them over the long haul.
Yeah, and they're, once again, they have a whole different set of objectives that they're trying to achieve. Yeah, they're wanting to make some money off of it, but, they do have a much longer term perspective on things.
It's a school, yeah.
Right.
Regarding that profit sharing, would it make it difficult to sell when it's time to, or are they already under
No,
the
because it's on
notion?
the NOI.
Okay.
It's not, you don't have a JV with them, they're
Okay.
not in your LLC or your BA or whatever you want to structure it.
Mhm.
It's a profit sharing from the NOI of the hotel,
Okay.
so it won't affect the
I got you.
prospects out. The other thing is, since this development has a real estate component, a for sale component, we're gonna perceive cash as the developers.
Right.
Perceive cash back fast, that's why
Right.
our return is on the 20.6%. And we can continue, but we felt that we wanted to keep a position on that particular property on the hotel side, because you need to see where you're gonna put your money to work, and we feel that this is a trophy asset, most likely if the redevelopment goes the way it's supposed to go. So Ritz-Carlton in that vicinity may end up being a trophy asset. We were conservative in terms of F&B, we were conservative in terms of income, very aggressive with the reserves for replacement. So our numbers are pretty robust in terms of the hotel numbers and what you expect per key. So when we did the stress test, we still can wear the cycle, and we're okay with that. So we end up.
What was F&B, say?
Food and beverage.
We have a breakdown of all that also.
You have FF&E, you have,
You wanna show them?
and you have, so the developer
No, it's on
IRR is
the,
at
on
20,
the Excel.
and for the private equity it's at 17, which is a good return for a private equity firm.
Okay, so now we're gonna talk about the Project Pro timeline. This is obviously, this looks better in Project Pro than when you copy paste it into a PowerPoint. But basically what we did was, we put both sites on one Gantt chart, and we are doing we're gonna start first quarter of 2015, we're gonna end fourth quarter of 2018, and we're going to do the due diligence for both sites at the same time. We're gonna do the site prep at the same time. We're gonna demolish the garage on the second site first. You can really see everything that I'm talking about. And then we're gonna go vertical almost at the same time as well. And then, I mean, just we used some milestones, which, you know, they'll obtain the building permit. Then you get the certificate of occupancy when you're done with both sides. And then for the one, and then certificate of occupancy for the other side. And that's basically the gist of it.
And just
for
to
the
piggyback a little bit, I think having the other class really helped us as we were going along, kept adding stuff, like, oh, we forgot this, and kept adding subsections, and it was just growing. It's pretty good with that.
I mean, the program has a lot of information that you have to input so you can run reports. And these reports that we ran, we did it on a live perspective. So obviously we're still in March and we're starting the first quarter, so it's gonna go to the next one, please.
Oops. Too far.
Oh, go to the 20, I guess. What is it? 20, yeah. 20 is the last one. So if we're doing it on a live, the dates are live, then you're gonna do, wait, that one. Then it's only gonna be, we're only 1%. Right now, we're only at 1%, which is due diligence, basically. That's where we are now, because it's still March. It's still the first quarter of 2015. And we put all the costs for the architect and the attorney and the general contractor, everything is in there. And we came up with this cost, I mean, so far for what we've done so far. But this is not, you know, like we're doing it live, so it's not gonna show the real numbers because it's not, it's not the final. Okay, now in conclusion, our team, what we're trying to do is we wanna integrate our sites into the downtown Seattle Central Waterfront area. We want to promote jobs, we want to boost the economy, we want to strengthen the community sub-market, we want to take advantage of the growing demographics, we want to take advantage of the new construction and the waterfront entertainment that's coming up. So we have to take, you know, we're taking advantage of what's going on in the city. We know that there's major technology giants that attract travelers and generate more residential demographics. And we're anticipating a growing tourist industry. In the downtown pipeline, there's new construction, and there's a really good opportunity to position a luxury hotel. So that's why we chose to go with the luxury hotel. Let's see. And I think that's it. I mean, and then we are projecting the 20 IRR for our team, 17 for the private equity fund, and we just think is the best proposal that the city can take at this time.
Questions?
Thank you very much.
we also did an ERV model, but we don't have it up there. We're at about
Never ever underestimate the power of ERV.
470. ERV is
Wait,
hot.
my-
Oh, yeah, John.
All right,
I worked
so here's
hard
the
to
plan.
create
We're almost done. So about 10 minutes or so, we will be completely done. All right, so once again, what I ask you guys to do, okay, so on a piece of paper, make sure I am clear about this. On a piece of paper, you are to list out and rank all of your team members, not yourself, okay? Missing 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Missing what, Johnny? Did he leave? Okay. Okay. All right. So once again, what I ask you to do, put your team name, your team member's name, rank order. Number 1 would be the most contributing member of the team. Number 4 would be the least contributing member of the team. If you feel as though all team members contributed equally, that is fine. Okay, you say that. Okay, but also I would like for you to give comments about each of your fellow team members. Okay, you know, anything that once again they did particularly well or that they didn't do. Okay, yes.
Can you tell us which team is which?
Well, we're going to get to that. This first part is only about your team members. Okay, just your team members. Okay. Now, the second part of the page is about the other teams. And for the other teams, you can just simply either put their team name or put a couple of their team members' names or, you know, that sort of thing. If you want the team numbers, team 1 was Anderson, Schachter, Branker, Pimenta.
Yeah.
What?
We don't know the last names.
Okay, Dustin, Alyssa, Mark, and Maricela was team number 1.
I put down like their,
However, just as long as
you know.
as long as I can identify which team it is, that's fine.
Can you repeat the name?
What team is that?
That was team 1.
Team 1.
Team 1.
Team 1, that was, once again, Dustin, Alyssa, Mark, and Maricela. It was team 1. Okay. Team 2 was Irene, Daryl, Denville, Laura, and Frederick. It was team 2. Team 3 was Catherine, sorry, it's Kim, not Catherine. Johnny, Justin, Juan, and Janae. It's team 3. And then team 4 was Tyler, Ryan, Robert, and Anthony. Okay? Now, all I want you to do on the other teams is you're not going to rank your own team. You're only ranking the other 3 teams and then simply say which one was the best one, which one was the worst one, and then your comments about them. Okay? Positive or negative. Okay? I have already determined what I feel like each team did and what each member did based on what I have observed. I am simply going to use this information just to sort of make sure I didn't overlook anything. Okay? I am not going to be sharing your information with anyone else. It is confidential. Okay? Yes?
You said 1 being the best?
Yes. Okay? Now, what I want you to do is once you have that information complete, give it to me. Okay. And make sure your name is on there so at least I know who it's coming from, make sure I've got it. That's fine. As long as I can figure it out, that's all that matters.
Good luck figuring it out. Little sloppy. Different colors, like color coordinated.
Okay. Now, what I am going to do, I am going to hang around here until I am done with the grades for this class. Now, it is your choice as to whether or not you hang around and wait for your grade. If you choose to not hang around, I would prefer that you simply wait until next week to give me the grade instead of getting a bunch of emails, okay? So, in other words, it's worth waiting. You can hang out, you can go get a drink or do whatever you want to go do, but I should be done with this in about 10 minutes, okay?
Hold on, I haven't given you mine. I'm translating it.
Another word to fail is
We have to put comments for every.
I don't need a tremendous number of comments or a tremendous amount of detail, just simply if there was anything that was kind of unusual in a good way or in a bad way. I'm not trying to make it overly complicated, just trying to be as fair as I can possibly be.
good.
You gotta write an essay though.
Oh, that's what it is.
Yeah, so you would have read it.
We gotta find out.
It's hard not to.
I can't